What's up? I hope you guys are doing good. So, when we talk about Crush 1000 Foundation, we're basically just talking about the things that you have to know about Crush 1000 before you consider ever trading it. Okay? So, in a bullish trend, which is an uptrend, okay? Crush 1000 tends to move towards the upside slowly but steadily. And those can be considered as the impulsive moves. So, two things that you have to note here are that when it's moving to the upside, Crush 1000 tends to move slowly but steadily. And these slow, steady moves to the upside can be considered as our impulsive moves. Okay, so unlike the volatility indices or currencies that have retracements that go down slowly like that, okay, instead of that, in Crush 1000 our retracements tend to just spike down. Okay, so let's continue. Unlike the volatility indices and currencies retracements, on Crush 1000 these might be impulsive, while the continuation moves are a bit more laid back. Okay. Here's an example or an illustration of the difference between the impulsive move and the retracement moves in Crush 1000 and most volatility indices and currencies. So you will find that mostly what happens in you'll find that mostly what happens when it comes to the volatility indices is that we'd have a move, an impulsive move going to the upside like that, okay, this here. Then we'll have our retracement move moving nicely laid back. And once we hit our point of interest, we then have an impulsive move going to the upside that takes out this high. Okay, so that this is how it happens mostly in volatility indices and currencies. But when it comes to the Crush 1000, we'd have our impulsive move going up, would have more retracements, but then our retracement, the main retracement, will just be a spike like that one. Okay, and our impulsive move will be a bit more laid back. Then we'll have a retracement move that will come back impulsively like that. So you find that there's a difference between this right here and this right here. Okay, this, the moves to the upside are a bit more laid back, while this, the moves to the upside, are very rapid. Okay, so we're focusing mainly on this because this is how Crush 1000 tends to behave. Okay, our strategy is based on taking advantage. Okay, so what we're mainly going to be doing when it comes to Crush 1000 is we're going to be taking advantage of the steady impulses, those slow moves to the upside. So we're going to only be interested in trading it when we're in a bullish trend. Okay, but in order for this to work, firstly we have to be in a bullish trend to begin with. We shall then use different tools. Such as the Fibonacci, the order blocks, and the fair value gap and the inducement in order to find the optimal trading entry where we are looking to risk less than what we are likely to gain. So the important things that are here are we shall use some different tools such as the Fibonacci, our order blocks, our fair value gaps, our inducement, in order to just find this. So what we're trying to do is just find this what we're trying to do is find this. Okay, we're trying to find this using that, and that. Okay, so here's an illustration of firstly how you have to find the main bullish trend when it comes to this. So the only thing that we're looking for on this one and the higher time frame is just breaks right there, and there. Okay, so we're looking for an impulsive move, retrace, take out some liquidity there, then impulsive move, we break this level, we come back down, take up some liquidity there, impulsive move, so on and so forth. Okay, so this is on the higher time frame. This is the first thing that we have to do. The next thing that we're going to be interested in doing is finding the optimal point of interest or optimal trading entry. This is the point where we're going to be looking to take our entries. So when we come up like that and we retrace, this point right here is where we're looking to take our entry. Those stop loss right there, our entry right there, they take profit way above. Okay, so say we break this level with this impulsive move right there, we retrace, come into this level right there, our stop loss will be there, our entry is there. We'll then be looking at targeting this level that is right above there. So in order to find this, we're going to use some different tools. Okay, some tools that we're going to be using are these right here. In order to find our OTE, we're going to need our inducement there, we will need our fair value gap, we will need our order block, and we'll use some Fibonacci retracements. Okay, so this is a screenshot of a trade that I took last week on the 16th of October on Crash 1000. Okay, so as we said earlier, we have this as our high. Okay, price is ranging like that. We made our lowest point, which is around there. We then came up, took out this high. Okay, so we can label that with a B, meaning break of structure. Then we made some tiny moves like that, then went to the upside. Okay, note that here, this impulsive move that happened here, we left a fair value gap. Okay, so after this move there, we had an impulsive retracement to the downside like that, which then took out this inducement that's right there, and we tapped into this fair value gap. This fair value gap, if you stretch it out like this. Okay, and we also tapped into our order block that's around there. Once this happened, it doesn't mean that we then entered immediately. Okay, once all of that happened, we took out our inducement, we are at the 71% level on the Fibonacci, we hit our fair value gap. We didn't enter immediately, we now got interested in entering when we just saw the sign of it now going to the upside. Okay, and how we saw this sign is when we started printing price. We saw price start printing itself, moving like this. Price moved up there, we had this red candle that's right there. After that red candle, we had a bullish engulfing candle that happened there. That is our sign that we are now starting to change direction. Okay, then I entered there and I had my stop loss just below there, which is a bit more aggressive because under normal circumstances the stop loss has to be around here. So I entered, stop loss is there. Then my take profit, I had it just below this supply zone that is right above there, because if I had left it at that supply zone, this trade was taken on the 5-minute chart. So it was highly likely that this supply zone would be what price needs in order for it to push down. So I had to take advantage of this move by putting my TP just below that supply zone, and we went in and hit our TP. Okay, so just replicate this setup, wait for it patiently. Okay, patiently. So based on everything that we've just gone through, for everything to work, we need these 5 things. Okay, the first thing is patience. Okay, just wait for your setup. Don't have the attitude of quick scalps, a quick buck here and there, because that's the only thing that's 3/4 of the time that's exactly what's going to lead you to blowing your account. The second thing that we need here is discipline. Okay, discipline on the charts and in your life as well. Okay, third thing that we need here is risk management. We have to risk less than what we are actually going to gain. The other thing that we need here is focus and trade your plan only. Don't be swayed by every fancy thing that you see on the internet or anything like that, but rather gain insight. And if it means that you have to get some knowledge from here and there, but it improves what you already have, then by all means, please do so and practice it. Okay, then build your consistency one setup or trade at a time. Okay, so if you've gotten anything of value from this small presentation or lesson, please feel free to pause, go through everything, make sure it sticks. Okay, make sure it sticks, and feel free to leave a like, comment, or subscribe. Let me know what you want to see next, and as always, just stay blessed. Keep on trading hard. Just stay blessed, stay focused.